Looks like the calls for Jerome Powell to resign are starting to come from places outside the White House and in the mainstream media. Just this morning, Mohamed El-Erian put out some notes, some tweets saying that Jerome Powell should resign, basically for the good of the Fed. This is a very interesting move, and I think would spark a instant reaction in the bond market as we move forward with this idea of Powell resigning. Who steps in? Somebody on the board, someone from outside. It would get very, very interesting. We also had some earnings this morning that are interesting in the housing market. We had reports from both D.R. Horton and Pulte. Both companies beat top line, beat bottom line. D.R. Horton actually raised guidance. The CEO at D.R. Horton said, "We closed more homes than the high end of our guidance," and they also expect sales incentives to remain high. Over at Pulte, again, who beat top line and bottom line, sales remain steady with aggressive buyer incentives. Interesting thing about Pulte I saw in the summary of notes is Pulte actually added 25,000 lots in the quarter. Pulte now controls 250,000 lots. It's a pretty interesting move, adding lots, adding land, becoming a little bit more of a land bank. That is really Pulte, I think, stepping on the gas when others are scared or concerned. Pulte is obviously adding lots because they see some opportunities in the future. Also interesting over at Pulte that they saw solid business growth in 55 plus communities. That frankly makes a lot of sense to me. Again, if you are thinking about Gen X and baby boomers who could maybe sell a house in California and buy in a 55 and older community, it makes total sense to me. Shout out Mike Simonson. Mike Simonson has taken on a new role at Compass Intelligence. He is now the chief economist, which means, thankfully, we will get weekly reports on the housing market that are very succinct and accurate. This week, we heard that inventory is up 28% year on year, with single-family homes now totaling 857,000. The week saw active listings grow 1.2%. Prices are up 1% year on year. The median price is now $395. And Mike is saying we could see negative home prices in 2025. Last thing to note, it appears that 41% of listings have now taken a price cut. Very, very interesting. Don't know if you guys saw these crazy reactions in a couple of stocks, Opendoor and Kohl's, but it feels like the Reddit warriors are back at it. Meme stocks going higher and higher. Very interesting reaction. Not sure if there's anything there, but hey, there you go. Let's congratulate somebody for joining school. We got a new member named Frankie. Frankie, thank you for joining. Folks, as you remember, Friday, Saturday, Sunday, you had the chance to meet with Coach Carson on Friday. That video is inside school. On Saturday, you had the first Gen Z Plus accountability group with Cody Davis. And then on Sunday, you had a conversation with the accountant to the stars, Bob Langworthy. This coming weekend, you've got Casey from Brick by Brick Wealth. Folks, her story is amazing. If you don't know Casey, she was a stay-at-home mom who turned to Etsy to create some capital and ultimately a $20,000 down payment on their first rental. Their portfolio now is 9 deep. Yep, only 9 houses. Now financially free with 9 houses. She is our Monday guest, but she will be coming live Sunday in school. So if you're looking to understand maybe where you could turn to a side hustle or how you could invest, maybe in Memphis, there's just so many things that Casey brings to the table. And I look forward to that conversation. So join school, work with Mark, the financial firefighter, get your first month reimbursed, and let's have some fun. Looks like California's unsold inventory is back to 2018 levels. Inventory in California is up 37%. Again, folks, remember what I've always said. These are the last couple of months of a buyer's market. Get aggressive. I am working with an agent in Vegas, Joe D., and we will likely be writing that offer of $300K on that house that's listed at $399. Again, doing what I say. It's funny, the Wall Street Journal had 2 articles yesterday. 2 articles, and it's very interesting to see what they're doing. The first article said, U.S. leading indicators show economic clouds are gathering. Okay, kind of doomy, kind of like Jamie Dimon saying, a Category 5, hurricane is coming or whatnot. But in the same paper, in the same Wall Street Journal, businesses and consumers are regaining their swagger. If we got businesses starting to deploy capital and we've got consumers starting to spend, I'm not sure how you get economic clouds. In fact, I would think the economic clouds are clearing, not gathering. But hey, I guess you got to sell newspapers somehow. Economists surveyed say they see lower risk of a recession in the near term as stronger job growth and tariffs prove lower and less costly than expected. I did check Truflation out. Truflation now is over 2%. So Truflation is sensing some rise in inflation. I think last month it bottomed at like 1.2 or something like that. So now it is up to 2.05. Again, nothing crazy, but it does show an interesting trend in inflation. Deutsche Bank actually sees the 30-year bond going up 0.5 point if Powell exits. I actually think that is light. I think an immediate reaction could send the 30-year bond up 1 point. Now, will it stay there? Will that just be a instant market reaction? A lot of other variables at play. But again, a sudden Powell exit would not be good for the bond market, in my opinion. Saw an interesting note from Realtor.com. Realtor.com says 60% of home shoppers are searching outside their metro in Q2. So you're looking to move. Maybe it's jobs, maybe it's relationships, don't know. But 60% of home shoppers are searching outside their metro. Newsweek put out an interesting article quoting LinkedIn. Said there was 25 of the fastest U.S. cities for jobs and new talent. I just captured the top 5. If you want to find it, go to Newsweek, 25 fastest U.S. cities. According to LinkedIn survey, Grand Rapids, Michigan, Boise, Idaho, Harrisburg, Pennsylvania, Albany, New York, and Milwaukee, Wisconsin. And the last thing I noted, looks like California has tied Nevada for the highest unemployment rate. In June, California unemployment rate ticked up to 5.4%. That is tied with Nevada for the highest unemployment rate. Folks, that's what we got for the daily financial news. Again, quick and clean, just what you need to know. No political nonsense. If you want to join, if you want to subscribe, hit that subscribe button. We go live 7:30 a.m. every day. Remember, if you are a landlord, we all know insurance is going up. So please reach out to Steadily. A link will be in the description. See if they can help you. See if they can give you better coverage at better rates. Maybe they can, maybe they can't. You won't know until you give Steadily a shot. And hopefully we will see more of you in school, just like Frankie joined yesterday. You're going to want to talk with Casey on Sunday. And then we've got some other stuff. We got, what do we got? Christian next. And then we got 2 surprise speakers that are coming to Vegas for our event. We'll start doing some speaker announcements. So lots of fun going on with the Sunday conversations. Join, become part of it. And of course, you got an accountability group 7 days a week. Join the one that you want and get involved in school. Take care. Later. Bye.